Let's have a look at what's going on. TCG Asset Management MD Chakri Lokapriya joins us now. Chakri, thank you very much indeed for coming on. And tell us about Infosys, tell us about your expectations, the trials and tribulations or otherwise for this company.
Hello, yes, Infosys, the bellwether of the IT industry, reports today, and TCS, its competitor, reported last week and beat expectations both on the revenue as well as on the margin front. So today Infosys is expected to report about $2.7 revenue growth quarter over quarter, and we think, if that number not just close to 3%, the market would view it positively. But TCS had a margin increase. It might be another story as far as Infosys is concerned. They've had a wage hike which might hold back margins, but overall we expect a good quarter from Infosys going into the quarter.
And Chakri, David here in Hong Kong, what would be the currency impact you're watching out of Infosys? I mean, both these companies get the bulk of the revenues outside India, North America to be exact.
Yes, the IT industry has benefited hugely, and Infosys too, with the fall in the rupee, and also with the fact that the underlying demand in the US and other export markets remains to be very strong. So against this backdrop, I think a bit of the currency actually is kind of a funny thing because it kind of loses out on cross-currency hedges. So notwithstanding that, the rupee fall versus the dollar is going to improve margins, but Infosys has been investing back into its business, and therefore the margin improvement might be a bit muted.
Chakri, how much, you mentioned TCS, but how much of a read-through from its earnings on Friday will we likely get in these figures from Infosys? And on top of that, at the end of the day, one company's gain can be another one's loss.
If you look at TCS beat revenue expectations by about 50 basis points. It improved its margins also by about 40-50 basis points. Now, the BFSI, the financial services, which is the end customers, important segment, important clients, have done well in the US, and TCS is stronger than Infosys in that segment and therefore benefited. While financial services is also important for Infosys, that benefit is kind of slightly more muted in the case of Infosys, but overall its demand from its various segments remains very healthy, and while it might not see that kind of a margin improvement that TCS saw, I still think that on a revenue it will beat consensus estimates.
Chakri, just to move to the banking sector, I mean, it would be too long to get into all the problems and challenges right now within that space, individually and also across just the entire sector. But do you own banks in your fund, and what have you done with those holdings?
Yes, indeed, and banks are the biggest sector in this country, and they represent probably 35% of the main indices. And so yes, we hold banks. We're kind of marginally underweight. Mind you, this is just a liquidity problem right now and the cost of borrowing problem, which has gone up. But other than that, except for the short term, I think longer term banks still are the most important sector for India.
Last question, Chakri. If you had to invest in anything in India right now, what asset class would it be, or what asset would it be?
For the first time in a long time, both equities as well as bonds have suffered losses in the recent past, given the volatility in both the rupee, the rising crude, the rising current account deficits, and the slowing tax collection. So against this backdrop, India is going now into a festive season. Consumer demand has been kind of muted. But it's likely to pick up. Valuations are more attractive, so that's one sector. Consumer discretionary. Second, all the export-related sectors, which is IT, pharma, and metals, are looking very strong.
Yep, there's the bullish call on India. Chakri, as always, thanks for coming on the show. Appreciate your insights there. Chakri Lokapriya, TCG Asset Management Managing Director.